What's up, guys? It's Harry Haas here, and this is going to be part 3 in my first bounce video series. And today I'm just going to be going over some topics that a lot of members have asked me. I know this pattern is pretty popular, and I know a lot of people were anxious for me to put a part 3 video out. I can't believe that it's almost been a year since I made my first part 1 and part 2. So without further ado, let's get into it. And just by the way, this is not financial advice, even if it seems like it. I'm not a financial advisor. Basically, this is just sharing my views and my opinions, and yeah, that's about it. So, first and foremost, I'd like you guys to watch part 1 and part 2 if you have not seen this one yet. And the reason is I'm just going to be going and diving deep into this setup. And so I expect that you guys have watched part 1 and part 2, because part 3, it's not about the setup and how it works. Part 3 is about using this setup more effectively to make sure that you are more profitable. And this is what my first one and my second one looks like. So expectations with the first bounce. Frontside bounces I'm a bit more patient on, because I know that this move is not over yet, and that people are still buying this move, and that it's still going up. Backside bounces, I know that there are more sellers than buyers. I understand that we are on the backside of the move, so I am less patient, and I am looking for more of a scalp trade than being a little bit more patient like I am on the front side. The front side bounces, you can be a little bit more patient on. You usually can get a little bit more of a gain than a backside bounce, but that doesn't mean that you can go ahead and be greedy. It just means in the back of your head, you can say to yourself, now I can be a little bit more patient. But the backside bounces, which we will get into, we're going to get into all of this. The backside bounces are more for scalp trades. And if it starts to stuff, you need to be realistic with the trade. Meaning that if a lot of people start buying the stock and it can't break a line or it can't break a level, that's usually going to be your sell target. That has kept me safe from avoiding a dump. And it's kept me safe in a lot of different scenarios, but basically it's if a lot of people start buying and it just really can't break a level, that is what a stuff is. Alex talks about the stuff moves a lot in further detail than this in chat and in some videos, so you can go ahead and watch those in the MIC library. So the front side. Now this front side and backside chart was developed purely for first bounces. There are going to be some variations for different setups, but this is a front side first bounce and a backside first bounce type of move. So usually on the front side, we get a spike out of nowhere at 9:30. Usually there's no volume traded further on the day. Usually it's just a big spike up. So yeah, we're looking for a big spike up. The second type of first bounce is a clean uptrending stock with one visible niche to choose from, and that is going to be a clean uptrending stock in pre-market. If it's uptrending, usually after the open, or it just kind of is a grinder, I usually don't like those types of patterns. And the front side, it doesn't have a pre-market high acting as resistance. It is making new highs actively. It is not. It doesn't have a high at like $1 away. The high might be 30 cents from where it is trading. It's going to be above VWAP, and you can feel the increased volume coming into the stock. When it's a hot chick, and you can feel people trading it, and you can feel the volume coming in. That's what I like. I don't like it to be choppy at all. Remember, I'm looking for a free-flowing move, not a super high float for the front side. I don't like those because they usually trade like pigs, and they usually don't have a lot of range, so I don't like those. And I'm looking for, an uptrend, basically. This is an example of an uptrend where, it comes up, it comes down, and then it keeps going up. That it's basically an uptrend. So basically in backside, it has a lot of volume, a lot of pre-market volume. So usually what happens is that these stocks, they get a lot of volume pre-market, and it usually has a lot of previous pre-market highs. I'm going to get into some diagrams with some examples later, but basically we can just use this to go off of. It's well below pre-market highs. It's had a lot of pre-market volume. usually we'll get like a spike around the open and with a niche, but we just need to understand that because it's backside and because that there are a lot of long traders stuck, we need to be more kind of impatient and look for quick scalps on the play. You need to be patient when it's coming to your levels, but as it starts to grind up and if you can feel it start to stuff, that's when you need to be impatient with the trade. That's a smart trade. Just cut it right there, and almost usually the stock will keep going and fade, but you can still scalp sometimes 20 to 30 to 40 cents off that type of move. And for some people, 20 to 30 to 40 cents is a great trade. It is to me. Other people are greedy and only trade for $1. Those types of people usually lose. Just take what the market gives you and understand the context of the type of move you're trading. Is it frontside or is it backside? There are less odds of a big bounce because it has so many previous resistance in the day to get over. I just understand that, that this type of move on the backside is only going to allow, in most cases, 20 to 30 cents or even sometimes 10 cents depending on the range. But I understand that before I take the trade. So that way when I'm in the trade, I understand appropriate sell targets, and I understand that I'm being realistic with what's going on and what's happening. I'm not being in Disneyland saying, oh, this could go up $2, $3, $4. No, I'm just looking for a quick, 20 to 30 cent scalp. So tips on the front side: if it feels like you're fighting the stock, then don't trade it. I say this all the time where, I don't like bounces where, the stock comes up and then, we're getting a lot of chop on the way down and it feels like backside and it feels like every little pop, even before it gets to the niche, is being sold. I don't like stuff like that. Sometimes the best trade is no trade. And even after watching this video, if you're like, well, I really don't want to trade the first bounce yet, I'm not really comfortable with that, that's okay. If you see a first bounce, you can watch it or you can record it or you can go over it. A lot of that stuff is very helpful, guys, because even if you don't trade it, sometimes you can learn more from not trading a setup and just watching it. So the next time when the setup comes again, you are able to play that setup with, a little bit more information than you had before. Remember that we're trading with the trend. I don't like death candles at all. That's usually Tosh's short signal. I don't like that type of big death candle. Stuff like that, not for me. And I'm also, like, what I mean by a lot of these moves in part 1 and part 2 is I'm looking for a fresh stock. I'm not trying to trade the second bounce or the third bounce or the second spike or the third spike, or stuff like that. I'm looking for the first spike, and I'm looking to go down and play to that niche. This is just a quick criteria refresher. I know that I have kind of just mentioned a lot of words with no diagrams, but I think it's just important to go over this stuff before we can start looking at charts, because once we start looking at charts, you're going to understand what I mean by all those diagrams and all those words that I just said. So anyway, the first bounce cheat sheet, I remember going over this and someone saw the first bounce pattern and they messaged me and they said, well, it didn't have institutional ownership over 25%, so I just didn't trade it. These are all just guidelines, guys. If let's say it has no institutional ownership and we still see the first bounce pattern, well, if it has a low float, then that stuff doesn't really matter. So these are all just a guide. All this stuff is just the process. It's understanding. It just adds to more conviction, but don't treat this stuff like the Bible. All I really care about is the float. I want it kind of under 20 mil, under 10 mil, under 5 mil. I just like a lower float. All these stuff it just adds to the conviction. And maybe when you're going into a trade and you see that it has a 10 mil float, but it's got, 40% institutional ownership, you can say to yourself, wow, this is something that I'd like to get into, rather than just be so rigid and just only look for this type of criteria. Look for the criteria, but don't treat it as a Bible. And don't just say, well, it doesn't have short interest over 25%, so I can't trade it. Or it doesn't have high insider ownership over 30%, so, oh, God, I can't trade it now, even though the pattern's right in front of you. Just use these as a guide. Use it as some conviction. And that's pretty much it. All I have to say on the criteria side of things. So the scan. A lot of people have been asking me how I scanned for these plays. There's two types of first bounce plays that I like. Number one are the biggest gainers in pre-market. Now this is a more this type of setup is more rare. We only really see it a couple times a month, where it's a low float uptrending stock with a niche similar to the OPTT chart. A lot of people know this chart from my part 1 and part 2. It's going to be in the video further along, and I'll mention it. But we're looking for a low. Either the stock is uptrending and it's just uptrending into the open, or so let's say we have none of those low float stocks uptrending towards the open. Usually I'll try and alert in chat and say, hey, I'm looking at this niche, or hey, I'm looking at that niche. But basically, usually we don't get that type of stuff. So let's say there's no biggest percent gainers in pre-market. Let's say there's no uptrending low floats with a niche. Then I'm going to be looking for the biggest percent change after the open with no PM volume, which is like a fresh spike. And usually it's a stock that has news. Usually it's a reverse split stock, lower float. Those are types of stuff I like a lot better than just trying to trade all the stocks that are up on the day, or just kind of trying to force a first bounce when a first bounce isn't there. I see a lot of people that try and force a first bounce, or just go out and say, okay, I'm only looking for first bounces is fine, but you need to be very disciplined if you're gonna trade that way, because you can't just be making stuff up. You can't say, oh, here's a higher float stock, or here's a stock on the backside. I'm going to look for $1 or $2 on a first bounce. Like that type of mindset just won't work. What you need to do is look at all the stocks up on the day, pick the best criteria, and then go in from there. And sometimes there will be a low float uptrending stock with no type of niche or no type of stuff like that. And you need to be able to say, okay, I don't see a niche on this type of play. I don't see anything like that. There's nothing here. There's no first bounce type of pattern on this play. You need to be okay with saying, okay, there's no first bounce. So let's say there's none of these, then I'll go into here, this category, and I'll say, okay, I'm looking for the biggest percent change after the open with no PM volume. So the biggest percent change that is after the open. I'm going to look at the chart and say, okay, wow, there was no kind of pre-market volume. There was nothing going on pre-market. This stock does have news. It does have a catalyst. It is a lower float. Then I'm going to look for the first bounce pattern on that. Remember, these are just scans. So this doesn't guarantee that there's going to be a first bounce pattern. This doesn't guarantee that there's going to be a first bounce pattern. This just gives us a criterion, something to go off of. It's like, okay, now that we know that there's an uptrending low float stock, okay, now we can get into the niche. Now we can get into the nitty-gritty stuff of what makes the first bounce pattern so great. Instead of just saying, oh, there's an uptrending stock, there must be a first bounce on it. Or, oh, there's a biggest percent gain at the open. Just because you see one or two of these things does not mean the pattern is going to be there. So I'm just trying to be very clear that if you do see this type of stuff, and you do see stocks like that, you need to go in and make sure it's the first bounce pattern. And this is kind of like step one, the scan. So let's say you've scanned. I've done the scan. Now what do I need to do? So basically, this is an old trade, and I can't believe 04, 03. It's been a while, but this is like an A+. This is stuff that I like. So basically what happened on this day, this is the example of the low float uptrending stock with the niche. This is a perfect example of this type of play, where we have the stock go up from, 650 area all the way up to $8, and this is the type of niche that I like. I remember that 775, 760 level, that was the level that I was eyeing. And, that's a perfect example of the uptrending stock, low float. It's a new name. We haven't heard OPTT before in a long time, or if ever. So that is something that, there's a lot of volume, a lot of people are involved in, stuff that I like. So let's get into the niche itself. The smaller the niche on the line, the higher the odds. The bigger the range on the day, the higher the odds. The lower the float, the higher the odds. I'm going to get into this also. Volume decreased in the bounce zone. This is something that I haven't talked about in a while, but what I've noticed is it's definitely added to an edge for me. And it should take, kind of under 10 minutes to fade to the niche after the niche is made. I'm not, I don't want a niche to be made at, let's say, 10 o'clock, and then at 2:30 people saying, oh, well, it's going down to the niche now. No, that's not what I want. I want it to kind of be a quick deal. So let's get into just off the line chart. These ones are the best ones, the small little ones. If we go back here, you notice how small this is and how little this is, and how, this is too big. This is like just not a niche at all. But this, you notice how it's, it's crisp. It's small. Like, that's what I really like. And exactly, just like this. If it's too big, like these ones are too big for me. And the reason is because usually if it's like this, there's some consolidation. There's a lot of people in these levels, either trap short or trap, whatever. I don't like them to be too big. I've just found personally that they haven't worked on the ones that are too big. So let's get into a front side bounce. I know that I've gone over this one before, but I think it's important to go over again just to understand what makes it so great. I know I've talked about this one a lot, but it's really good to just go over a refresher again in the series. So basically the line is on a whole number. That's going to add to the conviction. We get a small niche, which is exactly this with the friends. If you haven't heard of the first bounce friends, then you need to watch part 2 of the series. And we also get volume lowered in the bounce zone. I'm going to get into that later as well. It's an overextended move. And notice how what I mean by it's an overextended move. This is what I'd say is the first pre-market high on the day. So we get the pre-market high here, and, here it is. And basically, let's say that there was a niche right here. And it was trying to bounce off this niche. That'd be an idea of backside, but I will get into that later about using the pre-market highs as kind of a backside or a front side type of move. So yeah, I'm looking for an overextended move, one niche, low float. It's above all previous highs on the day, and it's also above VWAP. I know you can't see VWAP in here, but VWAP was kind of more in this level here. And what makes this A+ is that we can see how we get this massive overextended move. We get this tiny, there's a niche right here. Again, I have this chart in part 2, and it comes down and it keeps continuing up. This is a great example of a front side bounce, a front side move, and something that I like. Again, I'm going to be talking about this. This is not the holy grail. It just can add to some of the conviction in the bounce zones. What I have noticed is that there has been decreased volume near the bounce zone, and that the price is holding the kind of line. And this isn't a holy grail signal. It's just something to look out for, that sometimes the volume will die down a little bit and then start to ramp back up. And that has kind of given me a bit of conviction on the type of plays like this. But again, it's not a holy grail. You use risk management. There could be lower volume, and this type of play could not work. It's just something that adds to my conviction. Remember, I need all of these type of things. I need, a lot of reasons why I should be entering this trade. And this just adds another reason and just gives me a little bit more conviction than some of the other ones. So if you have back-tested charts at home, maybe you want to go and look at kind of if there was decreased volume in the zone. It is just something that has helped me. But again, it's not the holy grail. Don't just say, oh, well, there was decreased volume, so that means it automatically needs to bounce. You need all of these things too as well to kind of add to the conviction, to add to why you should even be in this trade in the first place. Again, and notice how small this niche is compared to the niches that I was talking about before. It's not something like this. Notice how tiny it is. That's something that I like. Even though it's showing like, 1.9 or whatever it is here, we can just go back here and notice that the friends are around $2, the 1.9 area. Yeah, that's the stuff that I like. And I like that this is so small. I like that this move is kind of overextended. This is perfect for me. Again, on the OPTT trade, I'd just like to recap again. This is something that has what I consider uptrending pre-market. and it goes up, it kind of breaks the highs and comes back down to my friends here. And we notice that there is some decreased volume around here. So that can add to my conviction on the play where we have the friends, we have a super, super small niche, and we just see it uptrend all the way up, comes back down. We get, a little bit of decreased volume here. We get a little bit of stuff in the zone, and it's perfect for me. That's exactly what I want to see. This stock ended up being a bigger gain, and, kind of the reason why was because this is a front side low flow day one. We have all these things. The pre-market highs are right here. So basically we have no previous pre-market highs up here. The pre-market highs are kind of right here, and we see it come down. This is a pure front side play. And then we get the niche, and then we get the lowered volume. It's around an $8 whole number, which is something that I was paying attention to too. So we have all these things, all these little kind of nuances that add up and that make the trade what this trade is. This is another one. This is one where we can talk about a scan that has spiked at around 9:30. This is 10:30 because where I trade it's 9:30 is 10:30 here. I'm kind of lucky. But anyway, this is one where it hasn't had a lot of data pre-market, and that we get this nice spike, and that we do get the friends right here, and that it kind of comes down. And some people would argue that this would be the first bounce. I'd argue that this is. And we also notice, again, a little bit of lower volume for the conviction. We notice that we do have the friends. We notice that the niche is very tiny. And all those things, again, just add up to my conviction every single time. I'm saying to myself, okay, what are the reasons why this is a bounce trade? Number one, this is front side. We have no previous pre-market highs on the day. We have nothing really to worry about there. All the new players are in right now. We have people longing it. We have people shorting it. We have all these things adding up. And again, we get this nice free-flowing move. We get the little niche right here. It comes down, and it kind of comes back up. So that's perfect for me. That's exactly something that I want. Notice how tiny this is. Notice where it is. 8.2 area. We get all these little things for this pattern. This is great for me. Arguably A+. And we notice that yes, it keeps going, and yes, it does go to 9, but I think the real first bounce trade would be selling at 8.2 to 8.4 into this type of range, selling into this type of move here, because I think that the odds of this stock doing this are pretty decreased, right? Like, I'm just showing you probably the best examples, but what we want is, this type of move is fine, 8.2 to 8.4, 8.5, a 30-cent play here, I think that's pretty good just off a little niche. And notice how tiny this is. Again, I'm going to keep repeating myself because I get the same questions all the time where people will ask me, the niche will be looking like something like this, and they'll be saying, well, how come the first bounce didn't work? Well, the niche was not small. Or how come this didn't work? Well, this, and this didn't add up. Have you watched the video? No, I haven't watched the video. And that's why it's really important, guys, to watch the videos all the time, whether it's me, Bao, Alex, Tosh, Joe, all the guys. It's really, really important to watch the videos. Anyway, small niche, that's what I liked. Play this pattern on stocks that are making new highs straight up over extended moves. That's what I'm trying to get through to you guys, is that this is an overextended move. This stock is making new highs. Those are the A+ stocks. Those are the ones that you should be focusing on, not a stock that has came down from $3 and is now trading at $2. This stock is actively making new highs. It's actively on the front side. And of course, we get this little niche here, so it's perfect. And of course, let's throw it back to Bao's video. Let's throw it back to, the master himself, day one. Let's look at what he traded. So now we're back here. We notice that this stock doesn't even have any kind of data on the day. This stock just shot up at 9:30. Was it a chat room pump? Could have been. Doesn't matter. At the end of the day, the pattern worked. And what we notice here again is we're getting a stock with a very, very, very small niche with an overextended move. This is A+. This is what you should be framing right here. Because, This is the type of move that we're looking for, guys. We're looking for this straight up extended move with the niche in the middle. You can't ask for anything more than that. And then we get the decreased volume inside the zone, which I noticed. This is Bow's exact chart. This is what it was looking like on the day. And, this is what kind of makes it perfect. We have kind of the little friends here. It's not necessarily a perfect setup for the friends, really, but I love how small the niche is. And also another thing that can add to the conviction is the volume here. Notice how it's kind of decreasing, but the volume's still holding. The stock isn't just straight up dumping. I mean, the volume is kind of holding. So this is kind of a great play for, $4 to 4.4. I mean, this is great just off a little niche here. Like this is a A plus setup. So when you're scanning, you can either be looking for, the stocks that are going up in the pre-market, but if there's no stocks up in the pre-market and you want to trade first bounce on the day, and this is going to be your setup, the only setup that you're trading, maybe you go in and you look for stocks that are just spiking right off the bat at 9:30, and we get the little niche and we get this, amazing mover. And you want a piece of it. This is kind of perfect, and notice again, it's also on a whole dollar line. So we noticed that OPTT was on the $8 line. We noticed that DARE was on the $2 line, and we're noticing that this one is on the $4 line. So again, we have another whole number to kind of go off of. We have some lowering volume and the stock is holding. That's something that adds to the conviction. Again, we have the first bounce friends. We have a low float, CPAH. We have a day one move. All these things are adding up. We have a nice spike, a nice free flowing move. All these things are adding to my conviction. Where I'm not saying, oh, well, we don't have a spike, but we have the friends. Or, oh, well, we don't have a this, but we have the that. And you're trying to kind of think your way into a trade. Don't do stuff like that. Make sure that you have, 2 or 3 or 4 reasons to go into a trade. You could see something fading without the friends or without an extended move and say, well, there is lowering volume, so that can be a reason. Don't try and think your way into a trade. Take all the available information in front of you and make a trade decision off of that. Again, VXRT, this was one that happened recently. Notice how quick this niche is and how it's not really my favorite because I would have liked it to go a little bit higher. It is kind of choppy, but there was kind of one right here, and there was kind of one right here, and this is like a B plus type of setup, like not something that I love. I don't love the range on it. You notice though that there was some kind of decreased volume in around this area. It is kind of around the $1 mark, but I'm not really a fan of stuff like this. The only reason why I put this in here was that it is kind of the pattern, and you notice here this is pre-market. It was just kind of a spike, and we do get the niche here. And it did ended up working, but it's more of kind of like a B plus. And it's just something to look out for, that when you see a big spike, wait for the niche, wait for stuff like that, and wait for the bounce pattern. It did work very well, and it just goes to show you that the tiny little smaller niches do work well. This was it on just a candlestick chart. We get the friends, we get the kind of, bounce continuing. This is more of kind of like a front side play where it's just a quick bounce and then it keeps continuing up. But really, I don't love the range here. I don't love a member sent me this chart. But it's just something to think about where we are in kind of a market right now where we are seeing a lot of first bounces. And this is just one of them where it's just it's all about just the context of the type of move, where this is kind of like a front side bounce. And yeah, that's about it for this one. BNGO, this is more of a backside bounce. So I want to also give you an example of a backside bounce. So basically, there's an overextended move. The niche here is way too big for me to like. I don't like a big niche like that. I don't like stuff like that. If we go back to the examples before that I just showed you, you can notice how, let's just go back anyway. You can notice how this small little niche is a lot different than this one right here. This one's, really big, and some people are going to say, it worked here, or I can send you a chart where a big niche worked. It's like, no, it's okay. It goes to show you that The bigger ones I'm not really a fan of. I don't like stuff like this at all. Uh, you know, I don't, and people can say like, oh yeah, this is one that failed, or oh, this is one, but I like if you go back and look at all the A+ ones, the niche is very small. The first bounce friends are really small. These are all really, really, really big candles. I like smaller friends candles, even more like this. If these had been the friends and these had been up here, I would have loved it. But instead, it was just something that was a little bit too big for me, something that I didn't really love or like. And also, again, this is something that I have been picking up on the backside. The volume has been, the volume's very big. There's no decreased volume like we saw on kind of those other stocks. So yeah, not something that I really love. This is a backside where it just kind of fails. So I wanted to add some failure ones in here to kind of give you guys something that to take account and to take example of one that failed, but also why it failed, why it didn't work. These were a little too big. This is just too big for me. And I took this trade and lost, but when I look back, probably broke some discipline on it. Probably just wanted to trade, but yeah, not something that I really love for that one. So I'm going to go over some member charts to ask me that they sent to go over some more examples of front side and back side. And I'm just going to keep going over examples because I think that's going to help a lot. Kind of the way this video was structured was that there was a lot of speaking at the start, and then I was going to apply that knowledge to the actual chart rather than mixing it. So if you want to go back and kind of review the original where I first start talking about, the pattern and the charts at the start of this video, you can go ahead and do that. So anyway, this is some member charts that people sent to me and asked me to go over. So first of all, this one, we get the overextended move, but we don't have friends or we don't have a niche. So I went ahead and I looked this one up, VIR. Well, we get a nice overextended move, but we don't get a niche here. So, not something that I'm looking to trade at all. We get no first bounce friends. I really appreciate people who sent me their charts. Like, I'm not trying to rip on people. I'm just trying to make people better and trying to show them, just things about this pattern and how they can learn and how they can get better. So basically, this one, we do get an overextended move, but I mean, it's kind of volume out of nowhere. And we also notice that there's no niche here. Like, we understand that there is no niche in this display. This is not a pattern that I've ever gone over. I've never said, look to go long just at 50% of the kind of retracement or whatever. I never talk about stuff like that. I'm just looking for a niche, a straight up, and a dip back. So that's I actually included an example on here of what I would have been looking for. I would have been looking for this tiny niche and for the stock to keep going up and then bounce here. That's what I kind of would have been looking for. Again, we have another example of a front side one. This is one that didn't have a lot of data pre-market, but also we noticed that we have a whole number here of $6. That's a nice whole number, and we notice that we get this tiny niche on an overextended move. Okay, so now the stock comes up and it comes down to the $6 whole number mark. It also has decreasing volume here. It's also holding the number. Those are all just convictions and stuff to add to these types of plays. And I really think that, because we have the whole number, because we have the decreased volume, because we have the small niche, because we kind of have that consolidation, we have that overextended move. CNET was a low float at the time. We have all these things that are kind of adding to the conviction and helping us out a lot. And this member also sent me the chart. I don't use any of this stuff. I don't use the Fibonacci, but it does really kind of help when we're looking down here, guys. I know that there's a lot of stuff going on with this chart. I just tried to make this video kind of as quick as I can. I don't use any stuff like that. But anyway, we noticed that we do get that overextended move. And it's way overextended. It doesn't really show what kind of happened down below. This is the original move. I mean, this stock went from $5 to $6 and moved about $1 a share. And we noticed this niche. We noticed how it kind of pulled back to the niche. These are all stuff that you can scan for and that you can look for if you're looking for the top percent gainers on the day. We also noticed that the pre-market back here, we're above all the pre-market highs. This stock has started to ramp up again. This is front side. And, again, I'm going to keep repeating myself. We notice the small niche. We notice the $6 mark. We notice all this stuff. We notice that right here, the volume starts to decrease and the stock starts to hold these levels. All of those stuff, again, can add to the conviction. I know I sound like a broken record. I know I'm saying the same thing, but get it in your head that all these stuff, all this stuff adds to the conviction. And I'm just answering people's questions. I answer people's questions all the time, and I'm just trying to be as straightforward as possible so you can use all these kind of things to make trade decisions and to get better. So yeah, we see the first bounce friends, we see it pop up, and yeah, that's basically, this stock did go from 6.8 to 8.2 area, but don't be greedy on stuff like that. This is what I mean though about being patient on the the front side, where there is a possibility of getting these big moves. But even 6.8 to $7 or 6.8 to 7.10, like that's still not that bad of a gain. It's still kind of the gains that we were hoping for. And it came down. I don't love to trade the same line twice, but I'm just giving an example of a big move that happened on the front side that worked using this pattern. So now HGTM. Let's talk about something that I don't want to look for. I hate plays like this. I hate choppy plays, there is a tiny little niche right here, but we get one little chop, two little chop, three little chop, four little chop, five. This looks a lot cleaner on a line chart, because on a candlestick chart, this is not kind of the pattern that we're looking for at all. This one, number 4, is the only one that I kind of would be looking for, but, if we're looking at number 4 up here, this is just too big of actually, let's take a look. Okay, number 4 is around 3.5. This 3.5, I actually have it. We noticed that the stock, at kind of like, let's say the 1010 area. Let's say 1010, 1005, that type of area. That we get that small little niche that we have back here. Now, again, this type of move is not like the other moves that I've showed you before that are A+ for me. I don't want to chop fast all the way up. I don't want like a grinding stock. So now we come back. We look at the candlestick chart. Let's say even we identified this type of niche, and we're like, oh, this has got to bounce now. We see a small niche. Like, this is what's got to happen. Now, for this type of stuff, we notice that at 10.05, it has, made this little niche. Well, the time for the little niche to have been hit would be at 10:15. So let's say this came up. Notice how this chart is a lot different from this chart, where in the next 10 minutes, we go back and retest these levels. Well, in this one, we don't really have that. It kind of comes back an hour later. And by that time, the stock has already hit. The move has kind of been over. It's kind of expired. Plus, we have all this chop from all the way up. We have kind of all this chop going all the way up, and so that type of stuff I don't really like. Had of this been a clean move out of the gate, and had of this, let's say that there was a really small niche right here and it came up and came back down, that's what I would have been looking for. But the chop fest, sometimes it's just better to leave stuff alone. I don't use any of these retracements. It's just a chart that someone sent me. I just tried to be quick and go over, and I didn't want to scroll all the way back to 2016 when this pattern was. So, yeah. This is an interesting one right here, SINT. This one, okay, so we have a lot of things to look at. We see that it's more of a backside bounce. So let's just start by identifying, is this a frontside bounce or is this a backside bounce? What we notice here is that, yeah, it's probably on the backside. The odds of this stock getting from 2.5 to 3.5 on the backside, pretty unlikely. Okay. So we know that. We know that the odds of this stock, trying to break or get to 3.75, it would need to do a lot of volume to get over all of these. So we understand that. That is already in our head. Number 2, we notice that the niche has kind of been formed at 9:30. Now, at 9:30, I don't really love the 9:30 niches. People are going to ask me, well, how come you didn't trade this one? This isn't my chart, but I don't like this one because it's too big, and it's also, it's too big for me. And you'll notice, oh well, it's not up here, but it's not a great one. It's not really in the middle of the move. It's kind of at the start of the move, and it's just kind of that the way that this stock moved. You can go back and look at this chart if you want. The data's up here. But basically, I don't like niches at the start of a move. Had the niche been right here in the middle, yeah, I would have liked it. Had it been smaller than this, yeah, I would have liked it. But again, you need to be picky and you need to be disciplined with the plays that you're trading. So again, we see this one, 930. Not really a fan of stuff at 930 when the 930 niche is formed. This one did work, and yeah, this type of stuff worked. But we have to remember that this is 930. There are a lot of people who are caught in this, this kind of area. And there are a lot of people who just buy stocks at 930 and hope that they go to, $5. And there are a lot of people just like that. So what we need to do is understand and say, hey, yes, this is kind of an overextended move, but we know that it is on the backside. That's kind of one. It doesn't mean that we're not going to trade it, but it just adds to the type of play and how realistic we're going to be with the actual stock. There are people who can think that this stock is going to go up to $5, but in reality, we're on the backside of a move. So yes, this is formed at 930. So the friends are going to be a lot harder to predict if you're looking to trade something like this. As we see, this member sent me, he looked to kind of go and buy it. I guess he must have set a fantasy order. Really nice cut here. I really like those cuts where you realize that you're kind of wrong. It's just one. It was a good cut, I think. But the friends are a little unpredictable at 930. If we're going over, this isn't necessarily A plus, but just know that the friends are going to be unpredictable because there's always so much range at 930. There's already so many players, so you're just going to be trying to go off that niche. Now the bottom of the niche was under 275. The top of the niche was, let's say, 380. So he started out and he said, okay, we're going to go at 380. Notice kind of the volume is kind of into this. I know that there were probably a lot of longs anticipating a break here, or there were a lot of longs up here, a lot of people bag holding from before. So the psychology for me on it is probably not going to look for a trade just because the niche was formed at 930. But anyway, good cut here. And then he's like, oh, well, probably going to bounce from here. Another good cut here. He had two really great cuts. I love those small cuts. They're going to be what keeps you in the game for a long time. So now he's saying to himself, it could be backside, or, is this going to recover? We notice the low volume here. Now, again, I know it's really hard to predict when you have 930 and you have the friends all over, kind of like this, right? So we notice kind of the bottom of the friend and the top of the friend. Well, the top of the friend got broken from this. But then you could try and argue that these are also a part of. So it's kind of unpredictable when you have the niche formed at 930. So just kind of for next time, just understand that. So anyway, we see the lower volume here. We see that, it is holding whatever, friends line there are, it's holding this kind of line right here. We understand that. Now it starts to kind of grind up and go up to 310. So basically my advice for this one would be, I would be looking for kind of this area as kind of the friend of the niche. This wick down here, obviously I don't want to go long this at 250. So now we have 270 and we kind of have 290. It's kind of the line that he was looking to draw. So you could be, and he went long kind of down here. It just kind of sucks the way that this trade ended up working out, but you can kind of use the volume to your advantage, and if it starts holding with the lower volume, that can kind of be an indication to start to get into if you have the friends and if you have everything else. I'm not saying it's the holy grail, but it can lead to a little bit more conviction on these types of plays. And he ended up catching the move eventually, but it is kind of nice to understand, with some lower volume can give you some conviction. Now, lower volume is not the holy grail, but it just can give you a little bit more conviction on when the bounce is going to come, rather than all these sellers here and all these sellers here and all these, the long traders are bailing. They're already kind of underwater in a setup like this, and especially on the backside, you need to be very, very, very patient when you're looking for the rebound for stuff like that. because you have all these other little resistance and all these other little lines too that make the stock very unpredictable because we may have the niche right here, but we have this line here and we have this line here and we have all these other different lines. So that's why these ones are a little bit harder, and the backside ones are a little bit harder to time than the front side ones. And that's where the volume comes in, where the volume starts to dry up a little bit, and the stock does start to keep holding. That's a main indication that we could be getting a bounce. So what the first bounce is not? This is not a first bounce. I was trying to explain to people. They were like, "Oh, well, the CEI, we're looking for the first bounce on it." This, for me, is not a first bounce. If the niche was like, let's say, a 2.2, yeah, it probably would have been a first bounce. But this type of play, not a first bounce for me. Jan, again, not a first bounce. This is not a niche, guys. Okay, this is not a niche. This is not something that I was looking to play or was looking for at all. This is not a niche. No first bounce here. That's just a simple avoid. If you're only looking to trade first bounce patterns, you just got to get good at avoiding and being disciplined and capitalizing on the ones that you see. FLNT. This one was a first bounce. So let's go over the timing of this type of trade. So now on FLNT, this is almost one similar to the example I showed. This is kind of a backside one too, where we have all the pre-market stuff going on and all that type of action going on. So basically this member, he had VWAP going for him with the niche, which is usually a good type of sign. So again, I'm trying to add and combine everything. So we had VWAP along the line. Okay. So number one, a lot of these low floats love to bounce off of VWAP, and they kind of love it. So basically, this one, it got a nice spike right off the open. And we notice that we have VWAP, which is, it's something that you can use. VWAP along the line is usually an indication that you'll probably get a bounce of some sort. And we also notice, I'm not sure if it was really kind of relevant here, but we also notice the volume kind of did dry up a little bit. Again, it's not going to be the holy grail. You're not going to necessarily see it every time. It's just something to add to the conviction. How much volume is being done at this level. We have VWAP, we have the friends, we have the small niche. So the advice that I'd give to this member would be I'd just probably go long at 3.4, risking 3.3, and that's enough to even give you. I mean, if you're going long here at at 3.4 at this kind of area, or even let's say you're going long at 3.5, 3.45, you're going long for VWAP, you can just risk the next line down. And by that time, you could have there's a couple different ways you could have. You could have either said, okay, I'm not going to preset my order, and I'm not going to look for a fantasy order, and I'm just going to wait till we start to get a rebound. But by this time, it's kind of too late, and the move has already happened, which sucks. So he just kind of mistimed this one by a little bit. And especially when you have VWAP aligning with the friends, I'd just take some, even a little bit just at VWAP, because that a lot of these low floats love to respect VWAP and they love to bounce off it. So when we finally get this type of move down, this could have even been a first bounce too, like a little bit. This was more of kind of a second bounce play, but we notice the volume starts to die down a little bit in here, and we notice that it's holding VWAP. It's holding the line, so you could take this trade with almost like a 10-cent risk, or you could scale in here and scale in here, trying to play off the bottom friend. There are a lot of different ways you could go about this, this type of trade. But what you don't want to do is chase the move. I say to myself all the time, I'm either going to be in at the best levels or I'm not going to be in at all. And this level just kind of gives you a bad risk reward, because you can't be in at 3.6, risking 3.3. That just doesn't work. 30 cents to make 20. So what you want to do is you can add some at VWAP if VWAP is, aligning with the friends, and you can add some kind of down here as well. And again, this is just kind of what it looked like. Notice how the niche is really small too. Notice how, in this area, the volume started to dry up a little bit. Notice how, yes, this is more of kind of a backside play for me as well because of all this pre-market and the junk going on here. And there are probably people long from 3.6 that are probably like, hallelujah, I made 10 cents, even though they were down at 60 at some point today. You know, people are crazy, they'll do whatever. So we have this overextended move, we get this small tiny niche, and that's exactly what I like for that. ACHV, this one, for this one, I don't really love it because the niche really isn't in the middle of the move. I understand why this trader would look to take some, you know, in around there, but you know, it does line up with VWAP. We do get a little bounce, but I think that by this time the move's kind of over. Like, you know, had the niche been around 1.5, that would have been a better bounce. You know, it's more closer to the high. Even with this one, like it accidentally just scrolled over to this one, but let's look at this one too as well. Notice how this bottom half is kind of longer than this top half in a lot of them. And had of there been, you know, a niche right here, it would have worked out well. But instead, it's kind of too below the move. It's not really something that, you know, I would look to long because it's so far down that, you know, after going from 1.7 all the way returning to 1.2 or returning to 1.1, you know, I wouldn't look to trade something like that. Not really a great bounce. Great size of the niche. I love that, but again, had of this been in the middle, would have been way better. This is something that I'm not looking for. I'm sorry, but I'm not looking for a grind up like this. You know, I'm really looking for a straight shooter like this. And, you know, some people are going to say, well, you know, you only made 30 cents. Well, it's 30 cents that is, you know, pretty predictable compared to just going in and jumping in on a random trade. You know, there's a lot of people that say, oh, well, there's no first bounces left. Or, you know, oh, well, there's this. Well, there are first bounces left. There are first bounces that I see every single week. You just need to scan for the top percent gainers and scan for those trades and scan how I told you guys at the start of this video. So anyway, with this one, yeah, it's not really, I'm not really a fan of this after, you know, it's had such a parabolic move. I would have loved the niche and the friends to be in around the 1.3. And you see what I'm saying, where it's just, you know, it's just too far down after the move. Like, the move has kind of happened. The first bounce has been missed. The first bounce was kind of in here at this one, but it wasn't a first bounce because it had no niche. This one, no. I don't like to trade grinders. Yeah, did it work? Yeah, but 9 times out of 10, this probably won't work. But you also see, like, yeah, you do get a little bit of decreased volume. Yeah, it is over VWAP. Yeah, it is uptrending, but I don't like stuff like that. This isn't the first bounce pattern in this right there. That's purely going long off a 7.9 niche, and that's a different play in itself. Remember, we're only talking about first bounce plays, so not really a first bounce play I'm looking for. And this is what it looked like too. You know, not really a fan of stuff like that. I don't, you know, it's too choppy for me. I like a nice straight up move, free flowing. This one, not a first bounce either. Too much consolidation happening along these lines. Yeah, it did happen. You know, these are plays that bounced off the lines. These are plays that bounced off the lines that, you know, Bao and Alex talk about every morning. But for me, when I'm talking pattern-wise, you know, this isn't something that I'm looking for or looking at. You know, I don't like it. This one right here, again, don't like this one either. BLNK, didn't even get a line chart because it's just too choppy all the way up. Yeah, did it end up working? For sure. You know, it ended up working, but not something that I like because of how choppy it is. You know, for the friends, I like the candles to be smaller. So yeah, did this trade work? It 100% did, but these trades are both based off of, you know, a kind of consolidation move, not really a first bounce move, not really a play that I like. So anyway, as I'm wrapping up this video, don't forget that it needs to be an overextended move. Don't forget the small niche. Don't forget the friends. Above VWAP is best. If the friends line up with VWAP and the niche, that's better. You know, we want new levels being reached. That's best. Lower volume can be used as an indicator near the bounce zones, but it's not a holy grail. It needs to be a part of the pattern. You just can't be saying, oh, well, we have a niche, a small niche, and we have some decreased volume. This should work. No, I don't really like stuff like that. I'm not looking for choppy moves. I'm not looking for consolidation. Smaller friends are good friends. I love the small, small, small friends. I love stuff like that. I love when the candles are super, super tiny on the way up. Gives me way more conviction. Cut losses quickly. I'm always looking to cut losses quickly. The snowplow just went by. It's actually snowing here. Anyway, I don't know if you could hear that or not. But anyway, cut losses quickly. Number one rule, you could get 9 great first bounce trades and think, oh, wow, I'm a wizard. If you don't cut that one loss, you're going to lose all your gains on your previous first bounce trades. That's not something that we want. And sometimes the fantasy order can help get you in the trade when you're first starting. A scalar fantasy order. But cut losses quickly on them if that idea doesn't work out. But make sure that it is a part of the pattern. Make sure that you're trading this pattern and the examples that I'm talking about in the video, because they do happen every single day. Now, being disciplined. This is something that it takes a lot of work, and sometimes you're going to be kicking yourself because after the trade ends, you're going to be saying, oh wow, that wasn't a first bounce trade. I wish that was a first bounce trade. Sometimes you're trying to think your way into a trade when it's not there. So only trade the best. Only trade, stocks like I'm showing you in this videos. Only trade examples like I'm showing you in this videos. Only trade the criteria that we talk about, the low float, the niche, the decreasing volume, holding near the zone. All those stuff just add up to the conviction. And I know that I have been repeating myself a lot, but just because you see a tiny little niche does not mean that it's first bounce. Just because you see some decreasing volume does not mean it's going to be a first bounce. Just because you see, one thing out of the 5 or 3 things that we're looking for, I think that you should have at least 3 or 4 main reasons of why it's a bounce trade. Because you could have a tiny niche, but the stock be too choppy, or you could have a really high float, but there's all these things that kind of add to the conviction and add to how I make a trade that, I'm always trying to be disciplined. I would rather try and think my way out of a trade than try and think my way into one, if that makes any sense, because I don't want to be just trading everything. And also, no question is a stupid question. I'm always in chat, so, don't hesitate to ask me a question or say, hey, Harry, is this a first bounce, or is this a first bounce, or is this whatever, don't ever hesitate to ever ask me a question. Anyway, this is the end of this video, guys. I know it is long, but I hope you guys did enjoy it. And be sure to send me a message in chat if you liked it, or be sure to kind of tell other members about the first bounce pattern. I know there are some people, that have been struggling and have finally came to MIC and are looking to learn new patterns. So yeah, this pattern is great for kind of a beginner pattern and is a great stepping stone into consistency and learning more long patterns. So I'm gonna try and start doing more videos like this, guys. I hope that you guys enjoyed this one, and for next time, this is Harry Haas signing off.